income business is Purdy. But that, I think, is an advantage to us in agriculture, is that we are a producer of, I call it energy, where food is human energy and fuel is energy for our industrial complex. So I think we're going to be much better beneficiaries of it than a lot of our brothers and sisters that are in other industries. But this is what the big bears are looking at, and that kind of tells you longer term. You can kind of go back to the 80s there, and basically what drove the rally from 1980 to 83 was those high interest rates. And the market is anticipating that at some point in time, in order to finance our debt, interest rates are going to have to go higher. And if that's the case, you want to own dollars. You're going to want to convert your equity into dollars and then put it into CDs and collect that higher interest rate. That could still be a long ways away. I don't think that's really going to happen, but it does tell you that if this dollar does strengthen, it's kind of deflationary because it tells you to liquidate your inventory just like it did in the early 80s when we had the high interest rate and strong dollar. It says liquidate inventories, turn it to cash, invest it in CDs, and just sit back and smoke a cigar. I remember my dad, I think people own production credits and money. I think he was getting 15–16% for it at one point in time for at least a year or so. He said so, but I think it only lasted like a year. But whether those days come back or not, who knows? But that's kind of what the big bears are looking at, and I think it is a concern that we have to be aware of. But like I said, right shoulder sometimes takes a long time. There'd be a lot of false starts, so it could take a year or two to develop that. This here is just a chart that kind of shows you the correlation and why the commodity market is so sensitive to the dollar. This is crude, soybeans, and corn prices. I took the dollar and just turned it upside down. So when you see the dollar trending higher, that tells you it's weakening. And when the dollar's trending down, it tells you it's strengthening. And you can kind of see it's not tit for tat, but it's kind of one of those factors that if the market is bullish, it helps it go higher. It makes it lighter. If the market is bearish, it just adds more weight to it. But you can kind of see there is a correlation there. And that's why I had a little problem with crude oil prices going a whole lot higher. I know everybody's getting bullish on energy prices. I think I filled up this morning in Bloomington. They were at 285, so I guess they're bound to turn and put 3 ton of gas in. And that alone, I think, is going to slow the economy down. We all know what $4 gas did a couple summers ago. I think $3 is part of, if you look back in history, and this is where I don't think Washington gets it right now, is every time we've had a big boom in our economy, it's been done because of cheap energy. Our economy being capitalistic in nature, even your communist countries, if you want growth in the economy, you've got to have cheap energy. And this high energy policy is not going to work. You are not going to build jobs. You're not going to buy manufacturing. And that's part of what I think the market looks at is that, if you're a decision maker with a big manufacturing company, why on earth would you build a new manufacturing plant in the United States? You are not going to do that when you've got every taxing body from the library district all the way up to the federal government coming for revenue. You've got politicians talking about taxing energy. So Washington don't get it because, if I was going to make a decision, I would put my factory in Mexico or China or what else. I don't have to deal with UAW. I don't have to deal with Washington politicians, the Green Movement. And I think this is where Washington at the moment don't get it if they want to talk about jobs. And it's going to be real tough to get a lot of jobs. Skip through all this stuff. this here this is the shipping index. It does show you that the economy is improving worldwide, because this here is the price of ships. So it does tell you that demand for ships to move product from one side of the world to the other side of the world is picking up. You can see we had a big spike up earlier this week. So there is some economic activity taking hold, but it's you know, not at 100 mile an hour yet, but we are showing some improvement, and that's all export activity. I mean, that's moving product from one side of the world to the other, so that's export and import. S&P 500, I've been kind of in the camp for some time that we could maybe go back to the pre-Lehman days, which is up there around 1,200, before we had that big sell-off there in September. Kind of using a head and shoulders bottom formation to kind of come up with that price objective. And that kind of correlates also with about a 62% retracement of the decline off of the record highs of 1576 down to the low that we had, I guess, a year ago this week at 666. But right at the moment, we're at that 50% benchmark, so that's why the market is sputtering a little bit. Whether or not we're able to punch on up through that early January high or not, we'll have to kind of wait and see on that. But I've kind of been in the opinion that we could at least try 1234. For those of you that do count waves of the market, a lot of times the market will have 3 waves. You can kind of see the first wave up from that 66 low. We went up about 950. We had a setback, and then we had this second wave up into early January. We had a setback. So we could be in the beginnings of the third wave up here, and whether or not that third wave goes ahead and takes us to this 1,200 or 1,300 mark, that would what I would be looking at. That's exactly what I'm looking at to do to play my 401k, whether it's correct or not. Somewhere in here, I'm going to unload all my stock and turn it to cash, and then watch it go on up to So I know how you guys feel when you sell your corn and that thing goes on up another 50%. So, that's kind of what I'm looking on the bigger picture. Gold is the animal that I think might tell a bigger story. Regardless of whether or not you can eat it or it has any major industrial use, gold is still perceived as a currency around the world. That you can go any place in this world and exchange gold for whatever that local currency is, or goods and services. So I think this is what traders are looking at, because they kind of feel, and this is where that dollar index chart will miss it, is if you have a worldwide currency devaluation, your index can stay the same, but you're still working with more dollars. So that is why people are investing in gold. I mean, that's the gold bug argument, is that before we're all done, we're going to have central bankers throughout the whole world devaluing their currency because politicians can't say no. I mean, you can see that in Washington. I don't care if the Republicans do get in next fall. I'll bet you they ain't going to be able to say no either, because people are just plain mad. And you start cutting back on Social Security, which absolutely has to be done. You're going to pick off the baby boomers, and they're the biggest voting bloc. They've already saw their 401k go to hell in a handbasket. And you start raising taxes and that. So I think that's why people are generally bullish inflation or hyperinflation or just a major currency devaluation, and why people are buying gold. Now, Gold is having a hard time sputtering here, getting this next leg up, and it may fail, but the next leg